Good evening and welcome to the Power of Passive Investing Meetup. We have an amazing guest today. As you guys know, we typically have real estate investors or people that service specifically real estate investors. Well, in this case, our guest, Uri Jaskiel, doesn't just service real estate investors, he services many industries, but he does have experience with the real estate company. He is an EOS implementer, and for folks that don't know, I'm sure Yuri is going to go into more details, but in general, EOS implementers help to scale businesses, and in this case, Yuri had helped to scale Terra Financial Solution, which is a real estate financial services consulting firm. As a VP of operations, he scaled them from 24,000 to 40,000 units. So without further ado, Yuri, I'd like to give you the stage. Welcome, and thank you so much for joining us.
Thank you, Alina, for inviting me. I want to start with a personal story. It was, when I was in business school in the UK, I was juggling a full-time abroad, and I was putting myself through business school. I would say putting myself, really was my wife and I working very hard to be able to afford afford the life there and pay for business school. And our goal in those years was to come out break even. And we were quite disappointed that after, selling all our stuff there, selling our car, furniture, etc., and after wrapping up our few years there, we realized that we had spent $21,000 more than we actually had earned in those years. And we were beaten, we were frustrated that all our hard work hadn't really put us in the secure place that we were hoping for, until we landed in the United States. And we actually were greeted, and we received a check of that same $21,000 actually from a real estate investment that I had made 2 years prior. This was the second refinance, and this was actually their 2x on my money. It was nearly to the dollar that we had overspent in those years over abroad, that the passive income of investing in real estate actually was a lifeline for us. This was actually not the only instance in my life where we were struggling as a couple to overcome financial limitations and came to a whole new reality through our real estate investing. And it's laid the foundation for my wife and myself to create the life that we are building. I share that because I don't know exactly whether the audience here are investors or owners, but the question that I have for you is, do you know the impact of the work that you are doing? Do you know the impact for your investors? Have you reflected on the progress that you yourself have made, or the impact that's made in your life, or the life of your tenants? If you'd give me exactly 30 minutes, and if you stay with me until the end, I will teach you 3 very specific learning objectives. Number 1, vision, or if you're managing a team. So if you're managing people or you're managing process, if you're doing everything yourself, because you're a one-man show or one-woman show, so you're managing the process, so then it's managing sort of what's your vision. And so I'll introduce you to a tool and discipline around charting a vision. And if you're managing a team, creating alignment around that one vision. The second piece is process, or creating accountability and discipline, executing towards that vision. And finally, number 3, sort of measuring your discipline or fostering greater team discipline towards those activities. And if we accomplish these specific aspects, would this be worth your time for the next 30 minutes? I'm going to share a screen to start the presentation more from a presentation side. Just give me 2 seconds.
Exciting, and great to hear, Yuri, that in the case of you and your wife, real estate was that problem solver, if you will, that helped you to survive. That's excellent.
1000%. Okay. Can you see my screen?
Yep, we can see it. The title is, now we can see the whole thing.
3 fundamentals of disciplined real estate investing and ownership. So I just started with sharing. This is my agenda, and I'm happy to share these slides afterward and actually the tools themselves. So the 3 points are vision, process, and discipline. So can I ask, where are you today? So are you directly buying real estate or investing with others? Are you managing people or are you managing the process? And what are some of those frustrations that you're facing today? Shoot me in the chat some messages or feel free to email them. So the first component is vision. I want to just get real with you for a second. What would take you from good to great? What's the best? I wanted blue sky thinking. What's the best that can happen? And if we were having this conversation 3 years from today, and you were looking back and over those 3 years to today, what has to have happened both professionally and personally for you to feel happy about that progress? It's the questions that we ask ourselves that shape the reality of the future. So when I'm working with my clients, we introduce them to this very simple document. We call it the Vision Traction Organizer. And this Vision Traction Organizer sort of gives you the scope of the vision, the long-term vision, and then reverse engineers that to traction, to reality. The 8 bullet points, the 8 questions on this Vision Traction Organizer are, as you can see, what are your core values? What's your core focus? What's your 10-year target? What's your marketing strategy? What's your 3-year picture? What's your 1-year plan? What are your rocks and what are your issues list? I'll go through each one of those individually. So core values is more relevant when you're talking about starting to hire other personalities, right? Company culture is built around the things the characteristics that come from your core, the values that guide you. It's less about what you do, but more about why you do it. And the characteristics that you bring to the table that motivate you and inspire you every day. And when you're building a team, you want to build a team with like-minded people, people that think and breathe the way you do, that share your core values. So those need to be discovered. They need to be defined. And you need to have the team live and breathe them, not just put them on a wall, put them in a drawer and sort of pontificate about these are core values, but actually do you hire, fire, reward, and retain and motivate and inspire people based on these core values? The second question is core focus. What's your purpose, cause, or passion? And what's your niche? So core focus, those are 2 components. Your purpose, cause, or passion is what comes from your core. Why you do what you do. Why you chose to make money with real estate more than anything else in the world. Why did you choose to deliver value to the world through real estate? What type of opportunity are you creating for your tenants? And then your niche, whether that's the asset class or whether you're a manager or whether you're buying single family homes or whether you're doing fix and flips, because you're creating every different type of investor has their niche that they decide to focus on. And the idea of defining your core focus is that you don't chase shiny objects. You get really, really good at mastering what you do. And then the scalability comes from doing it by building a team around you or doing it more effectively and doing it more of it, but not getting distracted. Many times people, when they're doing something, they say, you know what, wait a second, this asset class, or so I heard about this new opportunity, this opportunity, that opportunity. Core focus, asking yourself, what is my core focus? And ensuring that you're staying laser focused on that. The analogy that we like to communicate to our clients is we all live in the world and we sit and we bask in the warmth from the sun. And maybe you get a sunburn if you sit in it too long. But because the heat from the sun is dispersed heat, it doesn't burn us. But if you take a laser, just a tiny little bit of kilowatts of energy, but it's laser focus that actually could burn and cut through something. That's the power of having some laser focus, of being focused. The next aspect is of a vision is what's your 10-year target? And this is where I want to introduce you to the concept of reverse engineering the future that you're looking to build. 10 years is not necessarily 10 years. It could be anywhere from 5 to 30 years. But the idea is it's a big, hairy, audacious goal. It's something that excites you, that every day you know that you're building this future, and that every day your employees know that they're part of building this reality with you. And it's specifically supposed to be something that is beyond your reach, because you want to be pulling yourself up. You want to be pulling yourself up to the bar. When you're working out, you specifically try to go pull up to a bar that's much higher than where you are. And so the idea over here is for it to be wildly audacious, to excite you. And it's a target. It's literally just a target that's going to excite you. What do you want from your business? As I mentioned, it's 5 to 30 years out. It's the number one goal. And the marketing strategy, and this is more relevant if you're literally building out a team and you're more building this out as a business rather than just trying to acquire assets. But it's now that you own some assets, and now your tenant base, your tenants, who are your target markets? Are you doing affordable housing? Are you doing more luxury housing? Are you doing high-end fix and flips? You're doing low-end fix and flips. Understanding your target market, and then being able to focus on that target market and be able to communicate directly to that, who you should be talking to when you're spending your marketing or sales time. And 3 uniques is what makes you different. When you're building out a brand for your company, why should someone lease from you as opposed to from somebody else? What does your brand represent? And I think this is a very important point. I want to just put an emphasis on this for a second, because if you're looking to differentiate yourself in the real estate space, most real estate owners look at what they own as assets. They do not think of it as a business. They don't think of it as the, wait a second, if I build out a brand, there's value there. And I would like to shatter that, because I truly believe that if somebody wanted to differentiate and say, you know what, my approach towards my tenants is by creating a brand, creating an environment that represents something. Imagine what the world would look like if a landlord, his attitude was, you know, I have serenity in my home, and I want my tenants to have that gift. So I'm going to choose color tones when I paint an apartment. I'm going to choose, if I'm a developer, I'm going to build out a floor plan that fosters sort of an environment for people's families to thrive. But you're in the mindset of understanding your target market and being able to then, you know, the way you manage your real estate accordingly is based on those differentiators, based on that brand. Proven process and guarantee is a little bit different. Proven process is how you take people from just thinking about working with you till they're long-time satisfied tenants or clients or partners. And your guarantee is where you put your money where your mouth is. So if you differentiated your brand by saying, you know what, we answer maintenance calls within 24 hours, or you get a gift card on us. And the idea basically is to put your money where your mouth is in order to be able to motivate your person you're marketing to actually choose and work with you as opposed to somebody else. Not necessarily is proven process and guarantee relevant to this line, to your line of business, but we encourage our clients to think about those ideas. The next component is 3-year picture. And this is where I want you to get in the mindset of, I have my 10-year target that's way out on the wall, way out. It's a big, hairy, audacious goal, but I reverse engineered. I took one step back and I said, wait a second, in 3 years, just 3 short years, I could vividly see what that picture looks like. So we actually put a future date there. What's your revenue goal? What's your profit margin you're looking for? And what are measurables? What are actually quantifiable numbers that are actually going to help you be able to crystallize what that looks like? And what does that look like? If you look at my background, you see a picture. It's vivid. There's vividness to this, right? You can see books on the shelf. When you picture something, when it's in your mind's eye, there's much more of a likelihood of it actually coming into reality. And when you do really good 3-year planning, that sets you up very well for the traction side of this organizer, the 1-year plan. And now it's more of a plan. Now it's not just, okay, let's describe it. Now it's future date, revenue, profit, measurables, but now it's goals for the year. What are the actual priorities that in this year you need to do to get to 3 years? So we're introducing the element of priorities. And if you do that well, that sets you up for what we call rocks. Rocks comes from the analogy. Stephen Covey was the one who introduced the concept of sort of filling up the jar. If you want to do YouTube, you could YouTube Mayor K and then rocks in a jar. And I think that there's a short 3-minute clip that you'll be able to see sort of that paints the picture. The rocks are your priorities, the things that over the next 90 days, and this is the world that we encourage our clients to work in, to stand up above your business once every 90 days and look up at it from above and say, okay, now I'm going to step back into the business and execute like heck every day. But what am I going to be executing towards? And you spend that time, you put on a future date. What are your revenue goals for the quarter? What are your profit goals? What are your measurables that you're going to know whether this was a great quarter? And what are those priorities that are actually going to move you in a positive direction? And those rocks could look like maybe how many assets you wanted to acquire, or who you wanted to hire, or defining your process, or maybe securing a new lender. What are those big things that are actually going to drive you towards your 1-year plan? You'll notice one additional component that we added in rocks is who is taking the accountability here. And this is if you're managing a larger team, it's important for people to understand when they're now going to get into actual execution mode, who is the person that in 90 days we're sitting together in a meeting, we look at you and say, was this done or was it not done? And that person understands that the accountability lies with them. And finally, the last thing that lives on the Vision Traction Organizer is the issues list. We work with our clients to celebrate challenges. Visions are, and this is if this is one line that's worth listening to this entire webinar for. Greater are visions that incorporate celebrating challenge within them than visions that you believe you can execute on today. I'm gonna let that hang. We celebrate issues because when you celebrate issue, think about what your equation looks like. I know that for me to be able to do X, it's A plus B plus C plus D plus E plus F. And I know that I could do all those things. So that's why I equal my plan. But if you just added another piece in the equation, actually issues, challenges, so now the sky is the limit of what you're willing to embrace because you just tolerated failure and struggle into your equation. Because you know you'll have a methodology how to address it. I'm not going to go into how we address issues. If you want to learn more, reach out to me. There's some notes over there. You see prioritize, identify, discuss, and solve. That's our track. It's a little bit of a longer piece. That's vision. I hope this was clear. Alina, you want to take your pulse or should I just keep on going?
I think, Uri, what would be helpful if you could clarify something. So when you talk about celebrating issues, do you mean celebrating resolving the issues, or celebrating that, yes, I know I have these issues and I'm going to tackle them?
We talk about two disciplines around issues. Number one is celebrating issues, and the second one is learning how to solve them. First, teams have to actually get comfortable with actually challenge. It creates and fosters an open and honest environment within a team when people know that when they have a problem, they raise it and we put it up on the wall and it's okay. And when you create that type of environment in a team, then people then, instead of trying to hide where they're having difficulty with progress, they come to their seniors, they come to their manager, they come to the owner and say, here, we have a challenge. I have a challenge. And so instead of just squashing people's limitations, you actually draw those limitations out and enable the company to be driving progress, pushing through those things that are actually holding them back. Clear?
Yes, this was helpful. Thank you.
Okay.
And then do you translate the issues into the rocks as well?
So yes, so the issue solving track is what I just talked about: prioritize, identify, discuss, and solve. We encourage our clients to be doing every quarter, spending time discussing those issues. First, we prioritize, which means if you have a whole long list of issues, don't go from the top and work your way down. Take 2 minutes to just identify the top 3. 1, 2, 3. Then you go and discuss them. First, you have to actually identify the core issue. Most companies, most leaders spend a tremendous amount of time discussing challenges. Rarely do they discuss the core issue. I can give you an example from Terra Financial Solutions. We had a problem that whenever people were on sick leave, we turned to somebody else that was doing that function in the company. And we said, can you step in and cover your colleague? And they said, well, I can't. I don't know those client specifics. They're very unique. And I said, wait, let's take a step back. Either I could just solve this problem by saying, okay, you know what, I'll give you a bonus if you step in, or I could try to understand why do they feel that they can't step in and do something for their colleague? What's so unique about this client? And so what we did was we created a matrix of all the different client specifications. We were working with about 35 operators, and we made different themes and buckets around where there was client customizations. And then I gave it to my onboarding team. When they onboarded new clients, I said, instead of it just being fully customizable, we became semi-customizable. There was a questionnaire of where things were going to be, specific to this client. And then we created a knowledge base based on those customer specifications. And then every time somebody needed to step in for someone else, all they had to do is just pull up that document, review it, and then say, okay, now I know the rules that apply for this specific client. So first you need to identify the core issue before you start discussing solutions. And then first you identify, then you discuss, and then you move and resolve to solve. And the solutions could sometimes be that you need to research something further. The solutions could be sometimes it's a rock for a quarter, which then needs to be broken down further. Or sometimes it could be a to-do, something you could take care of in the next week. I'm going to move on. Okay. The second component that I would like to talk to you about tonight is process. I love this line from Isadora Sharp, the founder of Four Seasons Hotels. It's systemize the predictable so you can humanize the exceptional. Many times when you talk to people about process and whether process drives the business or people drive a business, they start getting worried that maybe you think that we're just all robots. I'm a huge believer in humanity and that people drive the world, but you can systemize the predictable so that you give the ability to humanize the exceptional. And so, now that we talked about what your vision is, and we started thinking about the concept of reverse engineering, this is a tool that's really helpful. It's called the Getting What You Want tool. It's really simple. You start on one side and you write, what do you want? And then you reverse engineer that to what actually has to happen a step before that. And is there a desired number of weekly activities that go into that? So I'll give you an example in the next slide, which introduces actually another element besides for just, besides for just getting what you want. This model is built from a winning by design model. I actually put on some examples now, but I did not fill it out completely. But the reason why I wanted you to see this bow tie as opposed to a classic sales funnel is because I think that real estate ownership needs a bow tie as opposed to a sales funnel, right? Because maybe when you're evaluating to whether to purchase an asset, you have a preliminary review. You get something from a broker, you get something from off market, somebody introduces you to a seller, and you do a preliminary review. You model it out based on the purchase price versus the rents. And then if it pencils out based on your more cursory analysis, you'll do a site visit. And then you'll say, you know what? This makes sense based on looking at it, based on what you think the CapEx budget's going to look like. You submit an offer. Of those offers that you submit, how many of them go under contract? And then, so you'll see that this funnel is getting smaller and smaller and smaller. To then, okay, you got past attorney review, you got past due diligence, then you did another site visit, sort of, right before your purchase test, make sure that you actually feel comfortable that after you do due diligence and after what you evaluated and how much you committed to purchasing this price, that actually makes sense. And then finally, you have your purchase. And now you own it. I did not fill out the second part because I thought that we would be able to do that as an exercise together. Sort of what are the activities that people are doing on a consistent basis now that they own it, right? And that's different for each person. That's different if you're in the single family space or you're in the multifamily space or you're industrial or you're in retail. And so I wanted to get everybody to have this thought, sort of how they're optimizing their assets. Because most of today's webinar is focused on sort of making sure that you yourself and your team are firing on full cylinder. But really it's in totality about optimization, ensuring. I have a passion for ensuring that humanity and the world is at its full and best use capacity. So that means that people are working at not at their capacity, but at their best unique abilities. And that assets are working at their best capabilities, right? So what type of reviews are you doing, whether they're weekly, quarterly, annually, to be able to make sure that your actual assets are giving the greatest value to all of the stakeholders, giving the greatest value to you as an owner, to your investors as partners in your deal, and even to your tenants. Because if you have a building of hundreds of units and you have a lot of down units, and that means you're not going to have the free cash flow to be able to either reinvest in the property, to be able to enhance the experience of the tenants, or just very simply, properties that are not necessarily cash flowing as well usually don't become the priority of the ownership and the management. And in totality, all the stakeholders usually suffer. So what are those activities, those weekly, quarterly, or monthly activities? And make sure that you're measuring them. And the idea of this was to sort of get in this headspace of what do you want? And then reverse engineering those steps to be able to then funnel that down to the progress that you're looking for. And the second thing that it allows you to do is actually define your process, right? So when you're doing these preliminary reviews, what does that look like? When you're doing those site visits, what does that look like? And you can create checklists around that. And every business has these handful of core processes: how they manage people, how they market, how they do leasing. And what are the numbers that you're going to be associating around your marketing? How you actually quantify whether, sort of your leasing agents are selling well. And then how you address maintenance tickets or how you address turnovers. One of the big things that we used to do at Terra was give our clients a make-ready board. A make-ready board looked very similar to this. All the different components sort of that go into taking a unit from when it's vacated all the way then to its lease up. And it included every single business component, whether it was looking at the apartment and doing an evaluation of the damages, to giving them back their security deposits, to getting a cleaning crew in there, to doing a turnover, either whether it was a freshen, whether it was a repainting, etc., to the lease up, to making sure that your checklist was being followed through consistently, and you actually had a way to measure how many days that the apartment sat at each stage. So you see and learn where your team is being holding up the progress. Okay. And finally, also, having a process around customer service and really celebrating your tenant experience. And also as well as your accounting function, how you're tracking sort of your rents, their ledgers, tracking the invoices that you're receiving, how they're coded, how they're processed, the approval workflows that they go through. If you're managing a team, if they're going through workflows to get approved, whether those are going to property managers, if there's a threshold that they need to go to regional managers, there's a further threshold that needs to go to ownership, whether things are being classified as CapEx, whether they're being classified as operating expenses, etc. And the idea is to take these processes and to simplify them and to create a manual and that's documented. And this becomes, sort of the way, your company way. This brings me to the last piece that I wanted to talk about. I hope that you're following sort of my mindset here, which is, what's your vision? What's my process to create that vision? And now, how do I ensure my discipline to actually create that? I love this line from Jim Barksdale. If we have data, let's look at the data. If all we have our opinion, then let's go with mine. This is like natural for teams when you don't have actual facts and figures. It's just a matter of like what you feel and think as opposed to reality. I'm not sure why I wrote final thoughts there, but winning, this is an important mindset piece around discipline. Winning is not always about winning the deal. Winning is about doing the things that you don't want to do, but know you have to. There are many details that go into successful execution. Sometimes you learn through failures, and sometimes there's just nitty gritty that needs to get you to the end line. So winning and having a mentality of like success is not always either that asset that you purchased or that lease up that you did, or making that distribution to investors. Winning is about having the commitment and the consistency to doing the things you don't want to do. We teach our clients to scorecard. And what this means is, I showed you earlier about that process and having that reverse engineering, all the different steps that takes you. Now it's a matter of tracking those measurables to those steps. And I thought we would do this together also to sort of get some ideas around what measurables can look like. Measurables can be like how many offers you submitted on a weekly basis. And these measurables are on a weekly basis. These are more generic measurables related to a typical business, sort of what your weekly revenue would look like, your cash balances, how many sales calls were made, how many sales meetings or proposals or closed business or customer satisfaction. But let's just take a step back and talk about the 4 themes in every single successful business. Every business has marketing where they create demand for their product or service. They sales where they take that demand and create revenue, they convert it into revenue. Ops where they deliver that service or goods. And then there's finance, which actually is looking after tracking inflows and outflows and making sure the company is looking after the health of the company. There are activities in every one of those themes. So whether it's on a leasing side, or whether it's on how many emails you sent out to go brokers to get sort of opportunities, whether in the acquisition stage, or to sales, to actually how many closed business you did, how many lease ups did you do, how many closed leases did you do, or how many tours did you do would be on the marketing side. And so we created dashboards in Yardi for our clients around these numbers to be able to ensure that sort of all the input information is feeding, and you could create automations around these. But the buck needs to stop at having a company scorecard that when you go on vacation, whether you're vacationing in Tahiti or the Maldives or Hawaii, you could pull up an iPad and look up at a company scorecard that looks like this. It has a weekly goal, and it has who's accountable for it, and it's tracking across 13 weeks in a quarter. And the idea is to see whether things are on track or off track every week, week in, week out. Am I meeting those KPIs? Am I meeting those numbers, those measurables? And if I'm not, then we drop that into the issues list, because there's an issue there. If we're not meeting our weekly goals, we have to say why. And that's why celebrating issues is critical, because we don't have a problem with it. Because if we had a problem with issues, then people would try to thump these numbers. And we don't want thumping numbers. We want honesty, because we want to be able to solve issues at the core and drive progress in those businesses. These are some just examples of scorecard measurables. I would love to hear what your measurables would be on from a real estate perspective. I did not want to project on the crew. And that's my wrap. That's my presentation. I apologize that it took me a few more minutes than I thought it would. Is there any questions?
Yuri, no, that was good. Thank you so much. Amazing presentation and very clear and concise. So what I gathered, and folks, feel free to post your questions within Q&A or chat. We'll grab them as they come in. But in the meantime, Yuri, let me ask you this. So what I gathered is EOS has a very strict implementation process, and for someone to implement it, you really need a hand-holding of the implementer like yourself in order to put it to work. Is that correct assumption?
No, incorrect assumption.
Okay.
Good question, though. Very good question. A very good question. I'm going to pull down my screen share in a second, but I just want everybody that's listening to this to take note of my cell phone and my email and my website, so they can either check it out. And my website will allow you to download tools and disciplines. I am happy to share some of these resources. But the reason why I said no is because, hang on a second. The reason why I said no is because, very simply, everything in EOS is in a book. There's a whole library of books. There's a library of books. This book called Traction is what goes through the primary, science of it. The work that I do is sort of I'm the artist. There's an art and science in the work that we do. Sort of there's the raw process, and then there's sort of integrating it into each business sort of where it can be valuable. My hope in this webinar was that it was standalone in the fact that you, as in charting out the best future for you and your family, I introduced you to the value of what it means to live with vision. What does it mean to live with intentionality? And then reverse engineering that intentionality into reality today. Number one. Number two, understanding that there's nuance and depth to process. Take what you're trying to accomplish and reverse engineer those steps to what are the different components that are necessary, and define how you do each step of those aspects, and either automate or hire out and delegate to others to help you with that process. And finally, to introduce discipline, create accountability with the scorecard to ensure that you're actually executing day in, day out towards that vision. And those are skills and characteristics that anyone can refine and develop in themselves. They can do it with either from surface level, watching a webinar like this, exploring it more in depth with the book Traction. There's another book called Process that focuses just on process. There's another book called Get a Grip, which is the novelized version of Traction. So for those that like enjoying more of a book, but this is not about me. This is about you. This is about you in the audience asking yourself the same way I opened with the story and said how much real estate investing has enabled in my life, my exposure towards real estate, and more fundamentally understanding how hard assets play a role in our life that we create for ourselves, whether it's our own home or the community that we choose to live in, understanding that the tangible world that we live in creates opportunity and realities for ourselves.
Excellent. Great point. So essentially, one does need to have a discipline to follow the system and to do it on a regular basis. That's
true. So a lot of the reasons why my friends and family, I would say, introduced me to others, and why people is because not everybody has either the tenacity to be self-disciplined, or they don't want to be managing this process themselves. They want to be in the conversation with their team about the future they're building, rather than managing and facilitating the conversation. So the role that I play with my clients is educator, facilitator, and coach. So I educate for context, I teach the tools and disciplines, and then I facilitate the conversation with the employees and the leadership team to sort of then coach out and tease out sort of what the future decisions they're going to be making. But I want to just, maybe we could, anchor this a little bit more to real estate related questions. This way it's more tangible for the audience that will be watching this. What do you
Sure. So the next question would be, can the system be applied to on the business or personal life as well?
Oh, good question. There is a personal VTO, a family VTO. Yes, 1000%. Those that are evangelical about EOS apply it to their personal lives as well. For sure, since I started getting into this, I myself have become much more intentional about my life. I run my practice on EOS. So that means that, and I'm a sole practitioner. So that means essentially my personal life is being run by this. But, when we build out, one of the things we didn't talk about at all over here, but we build out organizational structure. There are EOS implementers that actually have an organizational structure for their house, sort of roles and responsibilities, who takes out the garbage, who does the taxes, etc. I'm not that obsessive, but I definitely did sit with my wife and talk about sort of, the sliding scale of where we are today, in which our primary income is coming more from making money on my time, towards shifting towards making money on my money, and how I want that slider to be moving over as time progresses. And I think that's something that your audience, who's either focused on passive income or owning assets, is very much living with that intentionality of saying, sort of, what's my 10-year horizon of how many assets do I want to be owning, and how much sort of recurring revenue do I want from that rent, versus now we are more actively sort of either buying or actively managing, etc., and moving that needle slowly as they get older, etc. And so that intentionality is definitely a personal component.
Got it. Thank you, Uri. So let's switch to that personality of a passive investor, if you will. So it's a couple, they both working, they have W-2 jobs, they have kids, and they have some long-term goal, but what you mentioned earlier is some teams or families in this case set 10-year goals. Some may decide to set up 5 to 30-year goals. How does one decide whether they should look at 10 versus 30 years, and what makes the most sense to them?
So I have a little bit of a different approach when it comes to passive, sort of really making real passive investments.
Mm-hmm.
There are two things that I think that are important. Number one is actually becoming a good passive investor, right? There's two ways to invest in real estate. There's one is who, not how. I just have to know someone. I don't know, I have to know anything about it. As long as I get introduced to somebody good, so then I can throw money at them and hope for the best. There's another approach is more, sort of like, how do you actually know whether this is a good investment? And so the story that I told you when we started actually more started from who. I was myself earlier on in my career, I didn't know a lot about real estate investing. Through the process of investing, I learned more about it, but that was more a great introduction. I was introduced to someone that was the foundation. I was their first large multifamily purchase. Now they own 10,000 units.
Mm-hmm.
And so I came in on the ground floor with them. And because I came in on the ground floor with them, they were willing to take my small check then, which they would never have done, but they were great operators. They gave me back my money after 12 months, doubled it after 2 years, and then tripled it a few years later. So, and my money's still in the deal. So, so that's a matter of like just getting introduced to the who. But I do think that a good investor is someone, and if that's something that you're going to become a priority in your life, it's important to understand the mechanics of investment. It's important to be able to understand that there's really 3 fundamental legs towards evaluating investment, right? Basis, value creation, and yield, right? You have to understand whether the person is actually overpaying or they're buying something based on market. I like evaluating comps, whether it's based on sales comps on a purchase price or price per unit or on a gearing ratio. Just being able to evaluate the basis and then sort of understanding the strategy, how they're going to create the value. Is it realistic? Did they underwrite the numbers appropriately for this area, right? And so understanding the controllable and the non-controllable components of that, and understanding sort of on the rent side, the revenue side, whether they're setting market rents and their assumptions of what market rents are accurate, and whether they're going to push the rents are accurate based on where economic trends are, right? 1 year ago, people were projecting being able to raise rents exponentially based on the fact that the past 2 years they raised rents in the 10 digits. But the reality is now that sort of recession's looming, many areas rents are coming down. So understanding that and understanding sort of how economic trends affect real estate and how lowering rates, hiring interest rates results in evaluations coming down. These are components that a passive investor should and could understand.
Sure.
Did I answer that question?
To a degree. So you were using comps. Comps are typically applicable to the residential real estate. When we talk about commercial real estate syndications, passive investors look at the offerings where, while they see comps for the properties in the area, the main idea for them typically is to speak with the operator, decide whether they trust the operator, and then decide whether they trust the team. And then the last component is evaluate the deal and see whether that deal fits their criteria, if the first two are met, essentially. And the commercial real estate is valued at the NOI level, net operating income, versus the comps level. But the concept still applies overall that you've shared. It's just a different type of valuation for commercial real estate versus residential. You talked about the rocks in a jar. So should one look at that as filling up that jar with the rocks, or is that does that comparison apply here, or it doesn't really? Because I
So if you watch the video that I mentioned, Mayor K's video, you'll see that the idea was that if you fill up your jar with liquid, the jar will be full of all the mundane in your life. But if you start with filling up the rocks and then you throw in pebbles after that, and then you throw in dirt, and then you throw in liquid, so then you're essentially building sort of decisions around the most critical priorities.
I see.
And so it will be filled with all the other stuff around those priorities. And the idea of the rocks is to measure whether you're pushing progress in the business. So we use scorecarding to measure sort of consistent activities on a weekly basis. And rocks are sort of the improvements, the more fundamental improvements that you're making in your business.
Got it. Okay.
So you're not going to measure whether you hired a new CFO, or you're not going to measure whether you found a new contractor to do your fix and flips, right? But that may be a priority if you would actually identify and start working with someone.
But hiring a new CFO will help you to take care of your financials. If you're wearing multiple hats yourself, that will allow you to put more of your time on the strategy decisions versus doing the financials at the same time. So
Yes,
that
exactly.
will indirectly, I guess, impact your rocks. So if I were to understand that correctly, rocks are the main components, and then the pebbles that you mentioned and the dirt are the supporting elements that will help you achieve the rocks. Is that correct?
No.
No? Okay.
Sorry. I
It's
wasn't
all
so
good.
clear. Maybe I wasn't so clear. So it's more just an analogy towards life. It's really, Mayor K's video is not built for business. It's built for life. The idea is that sort of, if you don't make times for the things that are really important for you, you can get busy with the mundane.
Okay.
So the mundane doesn't necessarily support the priorities. They could be completely separate. The idea of rocks is sort of saying, if you took a step back from your business and said, what are the things that are actually going to really take my business to the next level, right? What are going to take my business to the next level? What are the priorities that I need to be working towards and working on? And so maybe some of those rocks will then need milestones within that. So, right? A rock is for the next 90 days. It's the next quarter. You could reverse engineer that into the 13 weeks, right? So let's say if you want to be purchasing another, you said, let's say use a passive income concept, more we are investing with syndicators. So you said that the primary due diligence components are sort of getting comfortable with the operator, right?
First the operator, the team, and then the offering.
Okay, so the operator, then the team, and the offering. So maybe if you wanted to make let's say you wanted to invest $50,000 this year or $100,000 this year, so you would have to, sort of meet 5 operators, right? So you could then make some milestones around how many operators you would meet. So week 1, you'd meet an operator. Week 2, you would meet his team. Week 3, you'd meet another operator. Week 4, his team. And sort of after that, a month and a half in, you'll have sort of evaluation, sort of which one of the operators you want to go forward in, and then start talking to them about some of those opportunities, look at on a weekly basis some of those opportunities, and then have one place, one capital, sort of one $50,000 investment in that quarter. Somebody else could sort of talk about wanting to, as a family, place $100,000 a month. And now they just need to create a process to be able to place $100,000 a month. What do they need to do to be able to look at deals very effectively, and creating a process around that?
That makes sense. Thank you. Thank you, Uri, for clarifying that. I don't see any more questions, Uri. thank you for joining us today and presenting. It's been a pleasure having you.
My
Folks,
pleasure.
again,
My pleasure.
feel free to reach out. This presentation is recorded, so you will all get the recording probably by early tomorrow. And Uri is available. He posted his information earlier, so just look through the presentation to find his info and connect with him. Thank you so much.
Thank you
Have a
very
great
much. I
evening.
appreciate it. Take care.
Take
Have a great
care.
evening.